Hello and welcome to this deep dive. We take different sources, examine them closely, and pull out the key insights for you. Today, we're diving into the really complex global economic situation, particularly focusing on the trade tensions between the U.S. and China.
That's right. And to kick things off, I think it's worth mentioning the work of analyst Jean Futol. His channel really digs into analysis, criteria, interpretation, common sense, reflections on these kinds of critical topics.
Exactly. He sets a good standard for the kind of thinking we need here. And our main sources for today's discussion, we're looking at recent analyses from the Mexican Family YouTube channel. They provide some really up-to-date commentary.
Yeah, they're right on the pulse. So the core theme today is really this escalating trade situation, its potential global impact, and also some pretty serious allegations of market manipulation that has surfaced.
Okay, let's unpack that, starting with the basics, the tariffs. How did this whole tit-for-tat thing get rolling?
Well, it ramped up significantly under President Trump. Initially, tariffs were imposed around 104% on certain Chinese goods, taxes on imports.
Sure. And China obviously didn't just accept that.
No, definitely not. They responded pretty quickly, raising their own tariffs on U.S. goods up to 125%.
And then the U.S. escalated again.
Correct. The U.S. then increased tariffs on Chinese goods further, pushing them to 135%. And like the Mexican Family Analysis points out, this wasn't a one-off thing. It's been a continuous back and forth.
A constant escalation. Okay, so how did China frame their response? What was their official stance and reaction?
Well, according to the sources, their response was sort of twofold. First, the State Council's tariff complaint in Beijing formally announced that 125% tariff hike on U.S. goods.
Right.
And second, they took the legal route. They filed a lawsuit with the World Trade Organization, the WTO, challenging those latest U.S. tariffs.
And the analysis described China's reaction as, what was it, cold and decisive, like without all the usual media fanfare we might expect.
Exactly. It was presented as less of a media show and more of a calculated, firm response, almost like they felt pushed into a corner, perhaps. Tired of the U.S. actions, as one source put it.
That makes sense. There was also a poll mentioned on the Mexican Family channel about China's perceived objective, wasn't there?
Yes, interesting stuff. They asked viewers what they thought China's real goal was. The options were something like causing a U.S. recession, ending the dollar's dominance, or just showing their independence from the U.S.
And what did people think?
The clear winner, with 50% of the vote, was demonstrating independence, showing they don't need to follow the U.S. lead anymore. About 29% thought it was about challenging the dollar, and 20% thought the aim was a U.S. recession.
Wow, 50% for independence. That's telling. It really suggests a view that China sees itself acting out of necessity, maybe feeling tired of the constant pressure, as you said.
Yeah, the analogy used was quite good. China isn't going to applaud or thank the U.S. for imposing tariffs. It's the reaction of a major power feeling economically targeted.
Which leads us straight into the economic impact. The analysis called it an economic slaughterhouse. What are the key vulnerabilities here?
The core argument presented is that in this kind of trade war, it's not just about who slaps on the highest tariff. It's about who can endure the economic pain the longest.
And there's a big imbalance in who depends on whom, right?
A massive imbalance. Look at the numbers. The U.S. exports about $125 billion worth of goods to China annually, but U.S. imports from China, that's around $530 billion.
$530 billion. Wow, that's more than 4 times the amount.
Exactly. It's hugely asymmetrical. So when China puts a 125% tariff on U.S. goods, it hurts specific U.S. sectors badly. Think agriculture in Iowa, car manufacturers in North Carolina, machinery from Texas, even software companies. Their products suddenly become much more expensive or even priced out of the Chinese market.
Okay, but don't the U.S. tariffs hurt Chinese exports just as much?
Well, yes and no. This is where China seems to have a strategic edge, according to the analysis. They have options. They can redirect exports to other growing markets, Africa, Eurasia, Latin America, Southeast Asia, where they don't face the same kind of restrictions.
Diversification.
Right. Plus, and this is crucial, many goods the U.S. imports from China aren't easily replaceable. We're talking essential components, specific minerals, electronics, industrial machinery, even pharmaceuticals.
Pharmaceuticals?
Yeah, get this. In 2023, apparently 74% of all antibiotics imported into the U.S. came from China. That's a huge dependency.
74%. That's staggering. So if China chose to restrict those exports, it could cause serious problems in key U.S. sectors.
Absolutely critical problems. And don't forget the direct hit to U.S. consumers. Those tariffs the U.S. puts on Chinese goods, they don't just disappear. They generally mean higher prices for everyday stuff, clothes, electronics, appliances, toys, car parts. It fuels inflation, hitting regular families.
Meanwhile, how is China positioned to withstand this pressure? What are their strengths?
They have several advantages highlighted in the analysis. First, significant state control over their banking system gives them financial flexibility. Second, their exports are already quite diversified geographically. Third, they can apparently activate domestic supply chains pretty quickly if needed.
And they've been investing heavily in future tech, haven't they?
For decades, electric cars, high-speed rail, 5G networks, semiconductors, their own GPS alternative, a space station, a global energy network. It's a long-term strategic focus.
Which contrasts sharply with the U.S. situation regarding national debt.
Exactly. The U.S. debt is over $34 trillion, and a significant chunk of that is held by China and Japan. It creates this paradox, right? Yeah. How do you wage an economic war against a country that's also one of your major creditors? It's like biting the hand that feeds you, as the saying goes.
And what about major U.S. tech companies? They must be feeling the heat.
Oh, absolutely. Companies like Apple, Tesla, Intel, Qualcomm, they rely heavily on Chinese manufacturing, Chinese components, and the huge Chinese consumer market. These tariffs and tensions create massive uncertainty and potential hits to their bottom line.
We saw Wall Street react pretty nervously whenever new tariff announcements were made.
Consistently negative, mostly. Market drops often followed Trump's announcements of tariff hikes. Investors clearly worry about the fallout for both the U.S. and the global economy. It suggests the markets maybe see something the policymakers didn't fully grasp, that you can't just win a trade war by hiking tariffs if the underlying economic structures aren't prepared. And China isn't, some small developing nation here.
Right. It's a major economic power. And the analysis suggests China's stance is hardening, even hinting at escalating beyond finance if necessary.
That's the undertone, yes. The sources suggest China isn't afraid to push back hard, potentially beyond just economic measures, if they feel their core interests are threatened.
Okay, this brings us to the market volatility and these really serious allegations of manipulation. After some tariff announcements, something like $6.4 trillion reportedly evaporated from Wall Street valuations.
Yes, the initial market reactions were severe. And it's worth noting, Janet Yellen, former Treasury Secretary, called Trump's economic policies a self-inflicted wound for the U.S.
We also saw gold prices rise and the dollar fall during that period.
Classic signs of uncertainty. Gold is a safe haven and pressure on the dollar. Investors get nervous, they look for stability.
And then there was that confusing episode about a tariff pause that wasn't really a pause for China.
Right, that was quite something. Trump announced a 90-day pause on new tariffs for most countries. But, and this was the crucial bit, not China. In fact, clarification came later that China's tariffs were actually increasing to 145%.
So the market rallied briefly on the pause news.
Exactly, a brief rally. But then it dropped again sharply once the clarification about China came out. It just added to the sense of chaos and unpredictability.
Which fueled the view that these moves weren't part of a clear strategy, more like improvisation.
That's certainly the narrative presented in the analyses we looked at, a lack of a coherent long-term plan. There were even reports mentioned that Trump's own economic advisors had warned him about potentially triggering a financial crisis on the scale of 2008 or, the early pandemic shock in 2020.
And this is where the manipulation allegations really come into focus. There was a post on Trump's social media platform, True Social.
Yes, this is a key point in the allegations. Shortly before the tariff suspension announcement, the one that didn't apply to China, Trump apparently posted something encouraging followers to buy online, signed DJT.
DJT, the stock ticker for Trump Media.
Precisely. The timing was suggestive. Yeah. That post, followed by the market-moving tariffs news, followed by a surge in Trump media stock, it raised a lot of eyebrows. Serious questions arose about potential illegal use of privileged information for personal gain or for the benefit of allies.
And there were specific examples cited of unusual trading activity just before these announcements.
Yes, very specific. Reports of huge spikes in trading volume for call options, bets that a stock price will rise on major ETFs like SPY, tracking the S&P 500, and QQQ, tracking the NASDAQ.
Like how big a spike?
In one instance cited, SPY call options reportedly jumped over 2,000% in just 1 hour, right before the news hit. That kind of activity, especially with options close to expiring, strongly suggests some traders might have known something the public didn't.
which prompted calls for investigation. I remember Senator Sanders being mentioned.
Correct. Senator Sanders publicly called for investigations into potential insider trading, linking it not just to the tariff announcements, but also some cryptocurrency activities. The sequence, Trump's post, the announcement, the market jump, looks suspicious to many.
Warren Buffett, too, reportedly.
Yes, there were reports that Warren Buffett, known for his focus on ethical investing, also called for an independent investigation to clear the air.
And the official response from Trump's team.
Essentially, they dismissed it, called it media alarmism, partisan attacks, and defended the actions as moves to bolster market confidence. But, the questions about who profited and how remain.
Okay, let's shift gears completely, though still in the realm of international tension. Trump also threatened Mexico over water.
Yes, another point of friction. This relates to the 1944 water treaty between the U.S. and Mexico, which governs how they share water from the Rio Grande, or Rio Bravo, as it's known in Mexico, and the Colorado River.
And Trump's claim was that Mexico wasn't holding up its end of the deal?
Specifically regarding water deliveries from the Rio Bravo into the U.S., yes. That was the accusation.
How did Mexico respond?
Mexico's president, Sheinbaum, basically stated that water delivery depends on water availability. They're facing severe drought conditions, like much of the region. If the water isn't in the reservoirs, they physically can't deliver the amounts stipulated in the treaty.
Makes sense. You can't deliver what you don't have.
Pretty much. Mexico also highlighted their ongoing efforts in water management and irrigation technology to cope with the scarcity.
What are the basics of that 1944 treaty?
Okay, so Mexico is obligated to deliver an average of 431.7 million cubic meters annually from the Rio Bravo, calculated over 5-year cycles. This averaging allows for fluctuations. In return, the U.S. delivers a much larger amount, 1.85 billion cubic meters annually to Mexico from the Colorado River.
And crucially, the treaty acknowledges drought.
Yes, explicitly.
Yep.
It contains a principle essentially stating no one is obligated to do the impossible. It recognizes that drought years can happen.
And there was a recent example of this, the 2015-2020 cycle.
Right. During that period, Mexico delivered significantly less water than required because the main shared reservoirs, La Amistad and Falcon dams, were critically low, down to like 25% capacity.
Yeah.
It was a documented instance of severe scarcity impacting treaty obligations.
So from Mexico's perspective, this isn't about unwillingness, it's about the reality of the drought.
Exactly. The view presented in the analysis is that Trump was potentially using the water issue as another pressure tactic, similar to the tariff threats made against Mexico in the past regarding steel and aluminum.
Leveraging a sensitive issue.
Yeah, the communication style was seen as threatening from Mexico's side. They also pointed out that the 5-year cycles in the treaty are designed to allow for reconciliation at the end, precisely because water availability varies. Remember the attempt to rename the Gulf of Mexico? It fits a pattern, perhaps.
What a tangled web. We've covered a lot: escalating tariffs, economic imbalances, alleged market manipulation, even water disputes.
It really highlights just how interconnected everything is in the global economy today, and how actions in one area can have unforeseen, far-reaching consequences.
It's definitely a lot to process. As we wrap up this deep dive, what's a final thought for our listeners to chew on?
I think it boils down to considering the long-term implications. What do these trade disputes, the questions around market integrity, and these geopolitical pressures mean for international trust, for financial stability? We have China currently pursuing greater autonomy, maybe challenging the existing order, and the U.S. facing internal questions about its economic strategy and market conduct. How these dynamics play out will shape a lot for everyone in the coming years. It's definitely something to keep a close eye on.